Howdy folks, welcome to the Daily Coin. My name is Rory and today is Sunday, May the 6th, and I have the very distinct honor and great pleasure of welcoming to the show for the first time an executive with over 25 years of international experience in the mining and finance industries. He was an officer with Barrick Gold Corporation. He was the CFO at North American Palladium, Gold Star Resources, Hudbay Minerals, along with a variety of other large gold mining companies. I'm speaking of the president and CEO of First Mining Gold Corporation, Mr. Jeff Swinoga. Jeff, welcome to the Daily Coin.
Well, great, Rory. Thanks for having me on the show. It's a pleasure to be here.
Well, I'm glad that you're here, and I'd met you through Lior over at Portfolio Wealth Global, and they've put together a fantastic report that can be found on their website at portfoliowealthglobal.com/gold2000. You can also find your more about the company at firstmininggold.com. You can also, if you're interested in their stock, you can check them out on the Toronto Exchange under the symbol T, or under the symbol FF, on the over-the-counter market under the symbol FFMGF, and on the Frankfurt Exchange under the symbol FMG. And Jeff, I want to ask about what's going on geopolitically. We have a lot of movement. We've got North Korea, South Korea kissing and making up. We got Russia that's been in the news for forever, it seems like. And now we have China coming onto the scene as well. And in terms of geopolitics, how effective is gold as a hedge?
No, it's a great question, Rory. And as you see, geopolitical risks increasing in the world, and there's a lot of moving pieces, and they're moving fast, right? And gold is also always seen as a safe haven metal to go to. People are attracted to gold. Over the last 2,000 years, people see value in it. I think it's going to continue for the next 2,000 years. During the You even look at situations in World War II, more extreme situations where gold was being moved around as to shelter it, hide it, and keep it from others. So massive movement of gold in World War II. I'm not saying gold's moving around too much right now, but what I'm saying is that you can see there's been accumulation. There's been accumulation by a number of major players like Russia and China. And it's seen as a safe haven against U.S. dollar inflation, but also geopolitical risk, as you talked about.
Yes, and what we're seeing right now, Jeff, is, as you mentioned, countries were moving their gold beyond their borders to keep it safe, and now we see some of these countries bringing it back home. With Germany in particular, we have. Just recently, Turkey. We've had Sweden. I believe not Sweden. Yeah, I think there was a whole list of I think 21 different countries, according to Peter Boehringer out of Germany, that were either discussing bringing home their gold or bringing gold as back to their monetary system. So gold still plays an important role, or so it seems, in our monetary system. Or am I wrong in that?
No, you're absolutely right. In fact, the Q1 report out shows that central bank buying is up 41% this year. So we're seeing, as you mentioned, repatriation. We're seeing new buying of gold, as you mentioned, Russia, Kazakhstan, and Turkey. China is going to be a long-term buyer as well, as what they've demonstrated over the last couple of years. It's to protect themselves against the U.S. dollar weakness, also to diversify, and also geopolitical mitigation. So a lot of smart players, central banks, are buying gold, and they have access to a lot of financial advisors. So they're being very smart about it, and we're seeing that buying happening. So it's very positive for the gold price. Seeing that type of demand coming through.
Well, you would think that it would be a much more positive for the gold, for the gold price, and I personally see that that changing over the next few years, and I'm sure you do as well.
Oh, absolutely. If we look at it, fundamentals on supply and demand for gold, if we can get into that, some of the major gold companies like Barrick, Newmont, and others, they've seen their reserves depleting. They're going to continue to deplete in the future. That's what they're forecasting. They have not done the exploration that they should have done to actually replace their reserves. So we're seeing a supply deficit. So demand is, as we talked about, is doing quite well. A lot of smart central banks and also individuals are buying gold. I mean, just yesterday there was an announcement that the second wealthiest person in Egypt, worth about $6 billion, is announced he's putting half of his net wealth, $3 billion, into gold. So I mean, he has access to, you can imagine, the advisors and the insight and the forecast that he is seeing. So he's making a big call on his net worth, putting that into gold. I'm not advocating everyone putting half their net worth into gold, but I think there's a place for gold in a portfolio. I also think there's a place for gold shares of mining companies in people's portfolio, depending on how they view what they want. So we're seeing a supply deficit. I believe we're going to see a supply deficit going forward. Again, how are the majors going to replace the reserves? Gold is very scarce to find. If you took all the gold above ground, it fits into an Olympic-sized swimming pool. Basically 20 meters cubed. So it's a very rare metal, and people have seen value for it since thousands of years. So it's very, very good for the gold price. I think we're gonna see a positive pressure moving up. You mentioned geopolitical risks. You're talking about U.S. inflation. Smart people buying it. I own it myself, so it's a great future for gold.
I own a little bit as well, and the gentleman that you mentioned, the Egyptian gentleman, he didn't get to have $6 billion worth of wealth because he made bad decisions. So there must be something up with him deciding to take a 50% risk on his entire wealth. That speaks in volume, in my opinion.
Yeah. Well, Rory, you know how he made his money? I did some research on him. In fact, he did it in the high-tech sector. So here you have a person who's made $6 billion, or roughly about that amount, in the high-tech sector, building up a network of telecom companies, and now he's making a big call about putting it half into gold. So you can see that, again, he's not married to the high-tech sector. He's not married to gold. He's making a rational investment decision based on what he thinks the future holds for the metal.
He's married to creating wealth. But now we have paper gold and the GLD. And when looking at the top 10 institutional holders of GLD shares outstanding, we see Ray Dalio's Bridgewater at number 5, and he is also very adamant about owning gold, saying, "He who doesn't own gold knows neither economics nor history. His fund is the world's best performing of all times with a compounded return of 21% a year." In other words, he expects gold to trade at $15.50. Otherwise, he wouldn't touch this trade. Do you see the price rising $200 from here?
I certainly see there's a lot of positive pressure on the gold price. It's been accumulating over the last year and a bit. So there's a lot of smart individuals that are putting their money at risk, as you mentioned, into gold and into gold shares. I think that's a logical progression. Yes. We're also hearing about China constantly accumulating gold. We're hearing Russia. The Q1 numbers just came out. Russia has been a prolific buyer of gold for its treasury. And I'm not sure if they're really moving away from the U.S. dollar, but they're certainly buffering their treasuries. And these are long-term trends that we're going to see over the next maybe the next decade, where accumulation of gold is going to be extremely important for central banks.
I would agree. I mean, I think that Russia, China, and the other nations, Kazakhstan is one nation that I really pay close attention to because of the nature of their their geographic location, first of all, makes them a very interesting country, and the role that they play with Russia and China, and their role with gold, with physical gold. And
well, in fact, the top buyers of gold from that perspective was Russia, Turkey, and Kazakhstan.
Yep.
And Russia made up about 35% of central bank buying of gold in Q1 this year. So I certainly hear what you're saying.
Yeah. And like I said, it's this small country that is they're exploding. Their economy is just, it's mind blowing. But I've heard that only about 1 out of 3,000 prospective projects ever reach production as far as mining production. I mean, how difficult is it to discover gold in terms of statistics?
Well, gold, people don't realize it because you see it on rings, you see it on necklaces and so forth, but it's a very scarce metal. If you put all of the gold in the world that's above ground, it fill the size of an Olympic swimming pool, right? A lot of people don't realize that, about 21 meters cubed, right? So when you look at the scarcity of gold and how it's very rare to find it, and the lack of exploration that we've seen with some of the major companies, gold companies, it's very difficult. I mean, you've got to find a deposit that has good infrastructure around it. You've got to find a deposit where the government's friendly to putting in mining laws and legal frameworks in order to extract that metal. There's a lot of factors that have to kind of line up in order for a deposit to sort of make it, and size is one of them. And again, we'll talk about Springpole. We've got the 5 million ounce deposit in Canada, but it's very rare. Gold. People don't realize how rare gold is, and how difficult it is to mine gold.
It is difficult to mine, and we're seeing one of the things that I pay attention to, and I feel confident you do as well, being in the position that you're in, is what's happening with global mine production as far as the industry as a whole. And it seems like, Jeff, that there was just a report about Barrick and Newmont, your old alma mater, Barrick, and their production has just fallen off a cliff. And what is on the horizon as far as from your perspective in terms of long-term gold production? Do you see any relief coming as far as overall gold production? I mean, somebody told me the other day, I'm not sure if it's true or not, that gold production was actually rising. But when I look at Barrick and their charts, I don't see that. I mean, what are you seeing?
No, I think that's Rory. I mean, obviously you've read a lot about it, so it's great to have this conversation. But yeah, the major gold companies have not done the exploration in the last 5 years that's needed to replace their reserves.
Right.
So what we're seeing now, as you mentioned, Barrick and Newmont and others, year over year they have declining production profiles because of this. And without that investment into exploration, as we talked about the scarcity of finding gold and mining it and so forth in geopolitical friendly environments. So what's happening is now you have a situation where demand is long-term fundamentally moving in a positive direction. You've got supply or mine supply, if you will, from some of these major companies who have not made the investment in exploration, actually depleting. So we have a supply deficit that looks like we're going to be confronting. People talk about peak gold. I'm not sure what year you want to put a date on it, but we have it. We're seeing the fundamentals drive us towards a supply deficit for gold. And what does that mean? It means that there's going to be positive pressure on the gold price from geopolitical perspective, from a fundamental supply-demand perspective. There's inflation in the U.S., which concerned about. So we have a lot of positive news for gold going forward, and smart people are seeing it. As I mentioned, the second wealthiest man in Egypt, he's putting $3 billion of his net wealth into gold, and as also the portfolio manager, you mentioned it. And the migration is to go from buying gold to buying shares in gold companies, because companies that are growing, that have the capacity to give you the greater number of ounces year over year versus just kind of having the same number of ounces of gold and buying it and seeing the price move. So you get the a multiplier effect with a growing gold company.
Exactly. And speaking of which, I mean, are you buying shares out on the open market? I mean, or do you think that potential shareholders stay away from companies that management isn't involved with as shareholders in general? I mean, what are you doing to safeguard your wealth regarding what we've just spoken about?
Yeah, well, Rory, I own gold myself, but more importantly, I've been buying shares in First Mining Gold on the open market. I'm very committed to this company. We've got a tremendous future in front of us. We've got a company maker a project called Springpole, again, 5 million ounces. So what I'm doing is I'm putting my first year salary into buying shares in the open market of First Mining. I've already bought 142,000 shares,
Wow.
and I'll continue to buy this year and show my commitment. I think management needs to be aligned with shareholders, and the best way to do that is to buy shares along with them.
I couldn't agree more. That's one of the reasons that I respect Keith Neumeyer so much, is because he's so heavily vested into his companies, and it makes me all the more excited about these changes and about you coming on board with First Mining Gold, because you are as committed as he is. That speaks in volume, in my opinion. And we see, according to the company's presentation, that in terms of your peer comparison, you are 71% below the average in terms of enterprise value divided by ounces of gold. I mean, what needs to change for the market to revert First Mining Gold to the mean, which isn't a small change either? I mean, it represents a 350% move to the upside. How do we get there?
Well, we're moving in that direction. That's why we have the change in strategy. This is why we're advancing our projects. We've got a number of initiatives, a number of catalysts this year that are going to affect our share price and show value for shareholders. As you mentioned, the ounces in the ground, as they get further above the ground, if you will, that's what we're looking to do. We're advancing the environmental assessment for Springpole. We've kicked off the federal process in Canada. We're kicking off the environmental process as well. We've got a great team up north in Ontario. So Springpole, we believe, is going to have first gold in about 5 years. So we're moving that dial. We're moving along. Again, 5 million ounces in Ontario is a beautiful thing. It's not in South America. It's not in Africa. It's not in Russia or China. It's in Ontario, and it's a great jurisdiction to be in. Now, I've worked in all those different regions I just mentioned, and I feel very fortunate. I feel Springpole is a company builder in terms of the deposit. It's probably one of the largest undeveloped gold deposits in Canada, if not the world. So very fortunate to have it under our mandate, so we can add value for shareholders. And again, that dollar per ounce, I mean, that's going to improve as we de-risk that project. We've also got 3 other projects in Ontario that I haven't even talked about, like Goldland, Cameron, and Pickle Crow. So not only do we have one large project in Ontario, we get 3 other ones, all within a couple hundred kilometers of each other. So this is a great foundation to build a large gold producer in Canada. And we have the wind at our backs. Gold price is moving up. We've got a great team. So the value is going to be recognized.
I like it a lot, and I agree that being in Canada is a much better and safer bet than being in any of the other jurisdictions that you mentioned. And 3 years ago, Jeff, the share price for First Mining Gold was around 40 cents Canadian. Today it's back to around 44 cents Canadian. So the price is roughly the same. What has changed in terms of value?
Oh, a number of things have changed, Rory. I mean, what we've seen here, I mean, the strategy to roll up these 25 properties with Keith and his team was very opportunistic, right? Low gold price environment, it's rolled up. Now we have a situation where we change the strategy, and again, advancing these projects under a great team that we have. So we're adding value intrinsically. Our share price has moved up roughly around 50 cents right now. So we're seeing the traction, we're seeing the visibility, we're explaining, we're educating the shareholders about our projects. It's going to, I think the shareholders are going to be, as they join us along this journey, are going to be well rewarded as they see what we're doing. And so we're focused on the fundamentals, we're focused on intrinsic value, and this is going to drive the share price higher.
I agree. And according to the company's presentation, the net present value of Springpole, which you've mentioned several times, is worth close to 4 times the entire market cap of the company. I mean, said differently, the whole of the company's 25 assets combined with everything you've already achieved in terms of permitting and the fact that you have $13 million in cash is worth Canadian dollars about 250 million, according to the market. But according to your preliminary economic assessment, the P report, just the primary project by itself is worth somewhere around 800 million Canadian. I mean, how is that possible?
Yeah, no, Roy, that's great. And just in Canadian dollars, the project, the Springpole is worth about, the PEA is worth about $1 billion Canadian. So you look at our market capitalization, wow. we moved up, as we mentioned, so we're up around 300 million right now. So again, we're already starting to see the traction. We're starting to see the movement forward. So again, having a project with an after-tax net present value of $800 million US or $1 billion Canadian, over 26% IRR after tax. Again, it's a 300,000 ounce project per year that it has a scarcity value to it. And being in Ontario, we kind of call it a big boy or big company project, because a lot of big companies would love to have this project in Ontario, love to advance it. The good news is that it's under us, and we're doing all the right things, much like my big company background, advancing this project for the best, to maximize value for shareholders here. So we're very, very pleased. And so, as you mentioned, I think that there's an arbitrage, if you will, between the value of Springpole and together with the other assets. If you add up the other assets and you look at the EV per ounce basis, I mean, they equate to about $1.4 billion, right, Canadian. Yep. So you can see there's lots of room there to grow as a company. And the key thing, again, is we're focused on building intrinsic value internally and building value for shareholders.
Well, and my guess is that you're going to do it beautifully, and you haven't amassed the resume and the bio that you have because you did things, you didn't do the right thing by the company and by your shareholders. So, yeah. I'm excited for you. I mean, how long before you can safely estimate Springpole will be in production? You had mentioned something about a 5-year window. Yeah. How is that project advancing more specifically? And you'd mentioned that there are 3 other projects that it's in close relationship to. Mm-hmm. Will all of these projects be feeding off of one another, or how's that going to work?
Great question, Rory, because in terms of the time frame for Springpole, what we're estimating is 5 years to first gold. We're going through the environmental assessment process, which we think is going to take about 2 years. We'll go through permitting and then construction following that for 2 years, and ultimately having first gold in 5 years. And it's got a 12-year mine life, and so we're very excited about having that. The other projects we have, Golden, is just south of Springpole. It's got 600,000 ounces of indicated ounces and 1.8 million of inferred. So what we've been doing is a 30,000 meter drill program to target lifting the inferred up to the indicated category, again, proving more confidence into the number of ounces that we do have. So that's and we're looking at a small area, about 2-3 kilometers at Golden. It's got a 50-kilometer strike. So what we're doing is we're stepping out 6-8 kilometers in either direction to hopefully demonstrate that that mineralization continues in the same methodology that we've seen with the drilling in that 2-3 kilometer area. So Golden could be big, but we have to do the drilling first, and we're doing it. So, and I think we're going to come up with some more drill results next week. So you'll see that as well, and then followed up with a resource estimate, and ultimately my target doing a preliminary economic assessment like we did with Springpole. Again, and that's within a couple hundred kilometers of Springpole. So great having that Goldland project. We've got Cameron as well. Again, another tier 1 project close by to Goldland. We're not doing a lot of work on it right now, but again, that's very prolific. We've got Pickle Crow, which is just east of Springpole. Former producing mine, produced 1.5 million ounces in the past. The mill's there. It's something that we'll look at and see what we can do to maybe get that up into production at some point. So we've got a great base in Ontario, and again, we don't just have one project, but the one project we do have within the portfolio is a company maker. So again, we're very happy about it.
Yeah, and it's not like you're out in the middle of nowhere, because you've got all of the, or I would imagine that a lot of the infrastructure that you need, like the high capacity electric, the water, the roads, all of that's already, a lot of that's already in place. So that's got to be a benefit to you guys.
Yeah, we have a 70-person camp up there. I was up there about 2 months ago to when I first joined, to kind of see it for myself. Power is close by. The road has already gone through the environmental assessment process, and then we're going through permitting right now for that road. We have a great relationship with Indigenous local communities around there. They want to see development. So I got a chance to meet all 3 chiefs that are nearby the property. Very positive feedback. They're aligned with us. They want to see employment and procurement, other things. So being not northern Ontario, but sort of in the middle of Ontario, it's a great situation for development. There's a lot of projects similar to ours that are being developed just south of us. So this is a natural progression that we're seeing. So we've got a lot of good things happening, like as you mentioned, infrastructure, local community support, and again, the scarcity value of having 5 million ounces in Ontario is again, it's we're very fortunate.
That's a lot of gold. I'm sorry.
While we talk about company maker, and what I mean by that, well, every large company that has done quite well and grown, like Barrick had Goldstrike in Nevada, Nick Weagle had LaRonde in Quebec, so we've got Springpole in Ontario, and again, this is the making of a large company. So I can certainly see it progressing. We have a plan in place. We're very strategic. We're very focused on our business objectives, and we're very much maybe just talk about we like to have a holistic framework of how we want to do business in Ontario. Again, we don't have just one project. We got 4 projects. So stepping back and looking at how we want to conduct ourselves in Ontario, what the type of company we want to be long term. We've adopted a very good cultural values-based philosophy, and a purpose-led culture. So we want to build long-term trust with all of our Indigenous and local communities around our projects, because it's extremely important in this environment to show, to be dignified, respectful, to show that we care, to be fair, all those things that we started learning grade 1. And we want to do that, because when you build a company long term, you got to have that culture that builds trust. Yes. And that's the type of company that we want to be.
Yeah, and that's really important. I mean, we've seen that in another project, how if you don't have that support, and you don't have if you're not working directly with the community like it sounds like you are, then you can have some serious issues. And not going into any details, I'm pretty sure you know exactly what I'm talking about.
Absolutely.
But it's, so I'm really glad to hear you say that, because having that community support, man, without that, you got nothing.
Absolutely. Yeah.
So I got one more question, if you don't mind, Jeff, then I'll let you get back to your afternoon.
Sure.
And been talking a lot about gold, and when I start hearing about 5 million ounces, I get all very excited. But how cyclical is the price of gold? I mean, we've seen it go up, down wildly since we went off the gold standard. And right now we've seen the same kind of range-bound situation for gold for a number of years. I mean, I personally see much higher gold in the not too distant future. How cyclical is the price of gold, and where do you see us at this point?
Yeah, no, it's a great question because I think people are attracted to volatility. I think gold has the volatility that people can be attracted to, and the reason I mention that is that if we step back, okay, if we go back to 1998, I joined Barrick Gold back then. Gold was $260 an ounce. You talk about the gold standard back in 1971, but from my personal experience, everyone said, "What are you doing joining a gold company when gold's 260?" Everything's going virtual. There are mining companies changing into internet companies, right? And the share prices go up and then they go right back down again, right? Yep. So, and when I joined them, a lot of analysts were saying gold's going down to $200 an ounce. So why would you do something like that, right? Anyway, so it was a situation where within a couple of years I saw gold almost double, right? And so everything that we thought was going virtual kind of came back to normalcy, if you will. So we saw gold almost double in that short time frame. As you mentioned, gold went to $1,900 about 5 years ago. So we've seen volatility. We've seen gold very volatile during the 2008-2009 crisis, credit crunch. So it does have volatility. But the great thing about gold that I like personally is that it's positive volatility. You're saying volatility, but it's an upward trend. Okay. So, and it's, when you see other countries printing money, creating inflation, you need inflation for growth. Every country knows that, right? Yep. So there's no inflation with gold. It's a good hedge against inflation, right? A scarce metal, people are attracted to it for the last 2,000 years. And so we're seeing I guess if you will, I'll call it like a positive volatility. So we do see a lot of peaks and recently it's been range bound. I think we're ready for a breakout. We already talked about the supply deficit. We're talking about central bank buying, and central banks are smart, right? They know what they're doing. They probably see pressure on the U.S. dollar, inflation in the U.S. They don't want to hurt the U.S. dollar, of course, because they've got a lot of treasuries that they've purchased in the past. So they're buying gold as much as they can without hurting the U.S. dollar implicitly, right? But we're seeing again the supply deficit because the major gold companies have not done the investment in exploration. So the next couple of years, I mean, it's going to be very interesting. You're seeing a lot of smart guys who have access to a lot of smart advisors, like again, the $6 billion guy in Egypt that is putting half his wealth in the gold. As you mentioned, other portfolio managers are buying gold, and the translation is that as they buy gold, I mean, people are going to start buying gold shares. Shares in mining companies that can show growth like ours. So I see a tremendous future for first mining gold. I see a positive upside for the gold price itself. So I'm very fortunate to be at this company in the right metal at the right time with the right portfolio. So I'm very pleased.
Well, I am very pleased as well, and I think that a couple of the points that you made as far as central banks buying, the supply deficits that we've discussed at length here, I think that it has to move up from here. I mean, it doesn't have to, but logic kind of says that it does, just based on those 2 points alone. And I really like what Ray Dalio. I mean, this man has the world's largest hedge fund and the most profitable. I mean, and what I really love what he said, which is, he who doesn't own gold knows neither economics nor history. I mean, that says it all right there. And for an argument to own gold, I mean, that's why I own gold, because I'm trying to understand history and I'm trying to understand economics. They're vital to our individual well-being. So, but we've been speaking with Jeff Swinoga, and he is the president and CEO of First Mining Gold Corporation. And you can find out more about Jeff and First Mining at firstmininggold.com. You can also check out a really Great report. It'll be linked below the video at portfoliowealthglobal.com/gold2000. And if you're interested in taking a look at their stock, you can find them on the Toronto Exchange, listed under the symbol FF, on the over-the-counter market under the symbol FFMGF, and on the Frankfurt Exchange under the symbol FMG. Jeff, I really appreciate all your time. This has been fantastic, and I look forward to speaking with you in the not-too-distant future.
Great. Well, thanks, Rory. It's been a real pleasure, and I really I think the more that investors learn about our company and the assets we have and how we want to conduct ourselves, and again, getting to know a great chairman, Keith Neumeyer, the more they're going to like. So I encourage everyone to go to our website to see how we're doing things and to follow us, because we're doing all the right things, we're ticking all the right boxes, and we've got the assets to do it. So,
well, thank you so much, and have a great afternoon.
Great. Thanks, Rory. Take care.